As a solid year and the market starts to wind down and traders appear to be taking some profits, in baseball terms, we're at strike one. So let's get into it. My name is Brian Cannon and welcome to Markets in 5. All right, I've got a number of charts I want to go through today, so I'm going to move a little bit faster. This is the traditional S&P 500 chart I normally show in Markets in 5, but this is basically strike one. So we've had a breakdown in the RSI here. Okay, so that's always our initial kind of warning flag, if you will. In addition, we broke down below the 20 and 50-day moving average. So really the next level of support here is this blue line, this blue dotted line. That's where if we break below that, now we've got, now we're starting to experience lower lows. Okay, so it's not there quite yet. So although we've had a strike one of breaking the RSI and in a couple of the moving averages on the daily chart, it's not the end of the world yet, but it is a strike one. All right, so this is the same chart. This is the S&P 500 only on a weekly basis. Okay, so you can see that although the daily has broken down on the weekly basis, which is what a lot of times we'll use to make active decisions, so that we don't get whipsawed in and out of trades. MACD still looks good. We're still above the weekly moving average. So if we begin to break down on the RSI and we begin to break this this moving average here, then we would probably begin to start acting in the form of raising cash, taking some risk off the table. All right, the reason that we're not at strike two yet is because the 5-day moving average and the 40-day and the 100-day moving average are very, very important to watch. So if you look at that historically, when the 5-day moving average breaks below the 100-day moving average, it coincides with a drop in the market. So we're not there yet. You see the 5-day starting to curl down, and you see the potential of this eventually breaking here at some point. But we're not there yet, and we also have this higher high, higher low kind of trend, and so we want to just make sure that these two hold up, or this would be strike two. All right, and this is the S&P 500 on a weekly basis again, and this would constitute really the strike three. So we haven't hit that yet, but essentially on a weekly basis, you can see that when the RSI dips below 50 and and we break that trend line, then generally speaking the market does experience a lot of pain. So we're not there quite yet. So we're still above this level on the moving average. So that's good. Now we are starting to roll over a little bit on the RSI on the weekly basis, but we're still above 50. So when you have those two drop at the same time, that's when the market really begins to create some turmoil. So we're not there yet, but that would be strike three. All right, this is the final chart I'm going to share with you. This is Nvidia. Nvidia just came out with earnings last night and essentially reported a year-over-year 62% increase in revenue. They went from $35 billion in Q3 of 2024 to $57 billion in Q3 of 2025. That is a massive move, and that's a lot of B's. And so there's been a lot of questions around, is the AI trade overdone? Is it is it a bubble? It very well may be a bubble, but I think when you have a bellwether stock, essentially the company that's at the heart of the AI trade, reporting a 62% increase in revenue year over year, that's just a massive move. So that tells me that this trade is not done. That tells me that this is more than likely going to be a buying opportunity, especially from a tech trade, which seems to be kind of overdone at this point in the market. We'll see what Nvidia does. We'll see if traders, if this kind of gets traders excited and puts this risk kind of AI trade back on the table or not. If not, and everything rolls over, we'll be looking at the strike two and strike three to determine our exit positions on many of our more risky type positions. So in wrapping up, although we've got one strike against us, we've got two to go. So we're watching it closely. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.